Hi traders, and welcome to my video on the moving average EA. This is a free EA that I've developed for the MT4 trading platform. You can download it using the link in the description below, and you can also download it from my website along with many other free EAs. So in this video, I'm just going to give you a quick run through of the EA and the various settings and how you can use it. Okay, so this is the MT4 trading platform here. You can see the strategy tester window, this one here. I've loaded the moving average EA there. For the symbol, I've chose the euro dollar. You can use any traded instrument that you wish. And for the period, I've chosen the 1 hour time frame. Again, you can use any chart time frame that you wish. I just find that the 1 hour, 4 hour, and daily charts tend to produce the better results, primarily because they contain more price data. Therefore, the signals tend to be more reliable. For the testing model, we can use open prices, and that's because the EA trades based on work. It calculates the moving averages based on open prices. Okay, so we can do initial testing with open prices just because it's quicker, but then when it comes down to the nitty gritty, you might want to switch over to every tick just because the intrabar prices can have an impact when it comes to stop loss, take profit. Okay. For the date, I'm just gonna do the previous month for this video. And we're gonna have visual mode checked so I can show you how it trades. If we go to the settings, I'll run through the various settings in a minute. I just want to show you quickly what the strategies do. No, in fact, I'll go through the settings first with you now. This is quite important. You understand the various different elements of the EA. So you have the pop. You can set alerts here. You have true or false. So you can do pop-up alerts, which is basically a platform pop-up when there's a signal. Okay, this is handy if you want to follow multiple charts and different time frames at the same time, and perhaps you're not constantly chart watching. You can just get an alert which will tell you which chart there's been a signal on. So you could follow as many charts as you want, 50 plus charts if you like, for various signals, just ensuring that there's plenty of opportunities for trades. Email and SMS alerts, basically the same, but you can just receive these alerts via email or SMS, which is handy if you're away from your trading platform, okay, and you want to have an alert just so you know when you need to act. Alternatively, there's the use trading option. When that's set to true, it basically means the EA will place and manage trades on your behalf, which is handy if you are away from your platform. Perhaps you want to run it 24/7 on a VPS, okay. Days filter is self-explanatory. That's the days of the week that the EA can trade. Hours filter, the same. That's basically the hours of the day that you want the EA to trade. Magic number, this is basically the order ID. So the ID for buy and sell trades, which is handy if you are using other expert advisors on the same trading account and you want to differentiate the trades. Okay, we have the maximum spread and maximum slippage settings. This basically means that the EA will avoid trading if the spread or slippage is above these values, which is set to 5 pips by default. Okay, and for the money management, we can set an open orders limit, set to 1 by default, which means that the EA can have a maximum of 1 buy trade open and or 1 sell trade open at any time. Okay, lot size, that's basically the position size the EA will take if you have use trade set to true. Lots is used if use risk here is set to false. If you set this use risk to true, then the EA will ignore this lots field and instead use the risk percent field, and then it will automatically calculate the lot size depending on the risk percent that you set. So it's set to 2 here, which means that the EA will calculate the lot size so that a maximum loss would be 2% of the account balance, and it also takes into account the stop loss for that. Okay, so stop loss and take profit, self-explanatory. You can set these as you wish. Close on opposite signal basically means that the EA will close an open trade if there is one, if there's a signal in the opposite direction. Okay, break even and trailing stop. Break even if set to true when the profit reaches this number in pips. The EA will move the stop loss to break even. And then if you have trailing stop set to true, it will trail the order by this number of pips. The stop loss, okay, will trail the order by this number of pips. Close percent, you can, each time the trailing gap is reached, you can close a percentage of the trade if you want. Okay, and the minimum lot to close is when you want to stop closing a percentage of the trade. So, for example, if we have a trade set to one lot, one standard lot here, and we have the minimum lot close set to 0.5 and the close percent 25%, the EA will close 25% every 50 pips until the minimum lot size of 0.5 is remaining. Okay, or if you set something higher than the lot size that you're using, it just won't close any at all, which is good if you just want to trail the price without closing part of the position. Moving average. Okay, so this is the actual strategy that's implemented within the EA. And for this EA, we have two options. So you have a moving average, which basically if price is above the moving average, it will buy. Price is below the moving average, it will sell. And you can change the moving average value here. The default is 14. Okay, and this can be good if you just, even if you're not trading automatically, if you have pop-up alerts set to true, I use trading false, then the EA will send you an alert when the price crosses the moving average, which could be handy if you're looking for a change in trend direction, perhaps to time an entry or look to exit a position. Okay. And the moving average crossover strategy, that is one of the most popular strategies you will find, is basically when the fast EMA here crosses above the slow MA here. I said EMA, is actually, this uses a simple moving average, just to clarify. So when the fast crosses the slow in the upwards direction, the EA will place a buy trade or send you a buy signal. When the fast SMA crosses the slow SMA to the downside, okay, the EA will place a sell trade, or if you have use trading set to false and pop-up alert set to true, it will just send you an alert. Again, you can change the fast SMA and slow SMA values. For example, if you wanted to do a death cross, which is basically when a death cross and golden cross, so when the 50 crosses the 200 in an upwards direction, it's known as a golden cross. When the 50 crosses the 200 in a downwards direction is known as a death cross. Okay, these are popular moving average crosses, and that with the moving average crossover set to true would trade the golden cross and death cross strategy for you. And if you had close on opposite set to true, it would close an open trade when there's an opposite signal. Okay, so in saying that, if we just put them, let me just reset. So we'll reset the settings, and we're going to have use trading, we're going to set to true because we're going to run a back test. We'll use one lot size. I'm only going to turn off the stop loss and take profit and set close opposite signal to true, just so you can see how the EA trades. Okay, so we'll use the moving average with a 14 SMA. Let's run that. Okay. As you can see here, every time the price crossed above or below the SMA, the EA bought or sold. Okay, when price crosses above, it buys. When price crosses below, it sells. Okay, it requires a closed bar as well. It's worth mentioning just for confirmation. Okay, and in this instance, if I just zoom out here. Okay, so we're in a downtrend. Price making lower highs. Nice wedge pattern formation here. Potential bull trap. Triple top. Okay, triple top formation is when resistance is tested at least 3 times. And we have a breakout of the support line there, and also there with an M pattern formation. There's a lot of bearish signals. In fact, I would have probably taken this trade or this trade, and even this breakout trade, because we had a confirmation of the breakout, a pullback. That support then became resistance, and a breakout to the downside there. So this is nothing to do with the EA. I'm just pointing this out on the chart as a strategy. Could have been a nice trade there for 350 plus pips with a trailing stop. Initial stop loss I would have placed above here somewhere, and we could have moved the stop loss here and here and here and here, here. Basically just move the stop loss to the highs after the price continues moving down, just to lock in profit when the price does turn around. Then when you see the market start to make these higher lows here, you can just we could have Higher lows, consolidation, we would have been thinking about closing the position anyway, and you can also close part of the position on the way down. I'm just pointing that out because I'm showing you that you don't necessarily need technical indicators or EAs to capture good trades. This is a 1 hour chart. I mean, if you're just checking every hour or every few hours on different trading instruments, you can capture nice trends like this. And even if you don't want to take the aggressive entry earlier on, you can be more conservative and wait for a real breakout down here and then just draw your support, M pattern formation, and breakout to the downside. There's ample opportunities you could have actually manually entered into this downtrend. It'd be rude for me not to point this out, even though it's not the purpose of this video. The purpose of this video is to discuss the moving average EA, but it does kind of tie in a way. I just think it's important that you learn if you don't already use them. Trend line, support and resistance, candlestick formations as well. Price action trading, basically, in my opinion, is the best way to trade along with good money management. So that being said, let's get back to the moving average. Right, we don't want to buy or sell just every time it crosses because we're going to get chopped in and out of the market. Okay, let's have a look at the graph. It's not a nice graph. Okay, but we might, if we had got to this point, we might say, okay, we're going to sell when price goes below the moving average. So we can, because we know we're in a downtrend, so we can set it to short only. Okay, we can run it then. Okay, graph's still not great. That's because we're closing every time the SMA crosses back above, which we don't want to do, because once we're in this nice downwards trend, just draw the lines again for you so we know where we are. Once we're in this nice downwards, oops, wrong one. Once we're in this nice downwards trend, we don't want to just enter and then exit. Okay, we want to try and get a good entry order on and capture as much profit as possible. So just to clarify, we're only shorting because we know we're in a downtrend, whereas if we were in an uptrend, like how far back, like here in this instance, we could have set the EA to long only just to alert us for long trades or take the long trades. But also, you might want long trade alerts in this scenario, just because if you get a long alert, a buy alert basically, it means that the price has crossed back above the MA, which could be good to identify a pullback. So you could see this trend here. You could be waiting for a pullback. You could set, okay, give me a buy alert because that means price is above the MA, and then I'm going to look to enter on that pullback and then wait for a breakout, okay? So if you had an alert here, price has gone above the MA, great. I'm going to wait for the new level of support to be breached. Again, you had an alert here, price is making a pullback. Fantastic. I'm going to wait for the level of support to be breached, and support becomes resistance, price continues down. So you get alert you can get an alert for the pullbacks and just use it to place your support and enter in on the breakout of support that way, rather than just trading every time the price crosses above or below the MA. So first of all, we just determine the direction we're going to trade in and then look to time our entry. So we turn off close. We don't want to close an opposite signal here because we just end up getting chopped in and out of the market, just entering and re-exiting. Why would we do that when there's this nice move here? We could simply have taken one good trade at the beginning, or even here after the trend has formed more, and then just rode that out as much as possible. So we'll turn off the close on opposite, and instead we'll use a stop loss, say 25 pips, and take profit, let's just say 100, okay? So let's run that and then see what happens. Okay, and then things start to look better already, okay? We have force of habit, drawing the lines. I mean, it's a bit OCD, but it just teaches good habits. Lower highs, breakout, support, downtrend, okay, just so you know where we are. And you can see we have the sell trade, 100 pip target, stop loss is up here, which is a decent area. Another sell trade. There's 3 good sell trades there, okay? Have a look at the graph. Very nice, upwards direction. Still, I wouldn't be happy with this. That's because a few reasons, which I'll cover now in terms of money management. I don't like using rigid stop loss and take profit levels. This stop loss placement wasn't too bad. You see that red dash there, here, if you can't see it. Yeah, it's reasonable. It's around the high, so I would have done that. Arguably, this one's reasonable as well. I would have looked to have placed my stop loss just above this high here, so that's reasonable. Same with this one, but the point I'm trying to make is there'll be instances where the stop loss could be 10 pips above the high, it could be 30 pips above the high, whereas an EA, if it's always using a fixed level, it may not be the most suitable level, okay? Which is why I feel like semi-automated trading could be more beneficial. Okay, and again, the same applies to the take profit. I mean, fantastic, 100 pips here. Let's take 100 pips, but no, not really. If you stayed in that, you wouldn't have needed to have re-entered. You could have just got 350 plus pips instead of that one trade. Instead, the more you re-enter, the more you risk eventually getting the trade wrong. Okay, so what I would do in that instance, I just wouldn't use a fixed take profit level. Okay, I just try and maximize a good move once I'm in it and just cut losing trades short. You know, for if I'm selling, I'll place a stop loss above the recent high. If I'm buying, I'll place it below the recent low. And in terms of take profit, I'll just get what the market, as much as milk the market as much as I can until, you know, we see the lower highs consolidation and that sort of continuation in the other direction there. Okay, so how can we maximize this? Well, we know we can turn off take profit. We're not going to close an opposite signal because we get out too early. So then the next best thing would be to trail, use a trailing stop, which will be beneficial. The thing is, manually it would be better, just because when price, say we entered here and price dropped to here, stop loss, my stop loss would go above this high here. And then when price drops to here, I'd move the stop loss maybe above this high here, okay? And then when the price drops to here, my stop loss maybe come above here, and so on and so forth, above the highs all the way down, just to maximize the move. And that way we could have trailed our stop loss manually above the highs all the way down to here somewhere. Okay, which would have been a great trade, just the one trade. An EA can't do that. That's just because the EA is again using fixed levels for the break even and trailing stop, but we'll experiment with it anyway. So we turn off the take profit. We don't want that. Stop loss we'll leave at 25 despite the limitations we've just discussed. And we're going to optimize. So optimization in the MT4 strategy tester, you basically just check the boxes you want to optimize. Okay, we're going to optimize the break even and trailing stop, whether it's true or false for either. And then on the point, we're going to start at 20 pips. We're going to go in 20 pip increments and stop at 100. So the EA will test every combination starting at 20, increasing in steps of 20 and stopping at 100. So that would be 20, 40, 60, 80, 100. Same for the trailing gap, 20, 20, 100. So it will test from 20 in steps of 20 to 100, 20, 40, 60, 80, 100. For the close percent, we'll say close percent 0, or sorry, we'll do 25 for that, 25 up to 75%, and for the minimum lot to close, if we're trading one standard lot, let's just say you can close 0.25 increments and stop at 1.25, which will just close none of the trade. Okay, and we've got a moving average set to true. So with optimization, you click optimization and it will just basically run a combination of all of those settings to see which produce the best results. Under this setting here, the genetic algorithm, when this is checked, basically means the EA will do the combinations that have the highest chance of producing good results. If you uncheck it, it will do every single combination, which can take a long time depending on the processor or just the computer quality of the computer that you're using. So let's run the optimization. Okay, and this produced the best results apparently. So you see it will just run every different combination and show you the results. Whilst this is in theory the highest, still this one is good because it was just the one trade, and in fact that wasn't actually even using a break even on that one or a trailing stop. But we'll use this one just to illustrate my point. So you double click it and then it will apply the settings. So you can see that the settings from that optimization showed that these were the optimal parameters for that. If we run the test now, you'll see what it shows us. And that's because those settings managed to capture the majority of that move, which was pretty good. The only thing that we had that sell trade there, but we would have known, we would not have had the EA trade in short then. And why is that? As I mentioned earlier, markets making lower highs, you know, is trending upwards. If anything, there's no reason why we would be looking to take short trades. Okay, so really that would have been a good catch. The only problem is with optimization, you can over optimize for the data set that you're using. So we've just optimized for the previous month, and those settings may not be the optimal settings for you know, the past year, the past 2 years, the past 5 years, and they won't be optimized for the future, of course. So you could run the risk of over optimization, or basically curve fitting, which is just finding the best settings for your particular data set, which may not, which is just, you know, coincidence. Let's say it's just doing what it says, over optimizing, just finding the best settings for a particular scenario, which may not necessarily have any particular logic behind them. Okay, so to illustrate my point, I think I'll just run a test with those exact settings that looked good for the previous month from the start of the year. And there you go. Okay, so where it may have looked good for the previous month, overall they weren't great. So what people tend to do is they'll let's just optimize. We'll optimize the close on opposite, we'll optimize the take profit, we'll optimize the stop loss. Oops. So put stop loss, we'll do 25 or 50. Take profit we'll do from 0. Actually, we'll leave the take profit off because we're gonna go with a break even, a trailing stop. Close and opposite signal we'll optimize. Let's even optimize the SMA, the moving average. So we'll do 7, 7 up to, what should we do, 35? Okay. And then I think, is that everything? Okay, so we'll run an optimization of that for the past year. See if we get any good results. Okay, let's pick one of these that look okay. Well, not fantastic, but let's take the top one. Okay, it's not great, but I'm pretty sure if we run that for another year, we go back another year, you know, it's not great. And why is that? It's because it was just optimized for 1 year prior. Okay, so just trying to emphasize the point, you can over optimize an EA just to give it settings that may look good historically, but they're just basically random. There's nothing can beat having a good solid trading strategy. So okay, let me reset the settings and come on to the next strategy in the EA for you. So just I'll take off the take profit and stop loss, but put close on opposite signal to true so you can see how the strategy works. And this is the crossover strategy. Okay, we use the 14 and 35 MA crossover, and I'll just run a visual test for you so you can see how this strategy works. I didn't set use trade to true, so it didn't trade. Fix that and we'll run it again. There you go. Oh, we're still trading short only, which isn't a bad idea. As I said, we are in a downtrend, so that's actually not a bad idea. What was the graph looking like? Not terrible, is it? But so you can see how it works. I'm going to put it long and short, run it again, and you can see there. What happens is every time these two MAs cross, I'll change the color of one of them. Every time these MAs cross, the EA is going to sell or buy. So if the fast crosses the slow downwards, the EA will sell. If it crosses it above, the EA will buy. See that? Buy, sell, buy, sell, buy, sell. Yeah, so on and so forth. The graph, not terrible. So this is a decent strategy, you know, your basic moving average crossover. As I said, you've got the golden cross and the death cross. I do have videos on both of those. You could configure the EA to do that strategy for you. Or you could, you know, just trade in the direction of the trend. I wonder if there is a depth cross on here. We're doing 200, 50. Yeah, so there's a depth cross there, as I was saying earlier, when the 50 crosses the 200, above or below. Below is a depth cross, above is a golden cross, but cross is there, and that wouldn't have been a bad trade, to be fair. However, if we trade it every time, let's have a look. So we'll do the depth cross and golden cross strategy, and we'll go back another month, I think, and we'll run that. Right. Now, if we, I just change the color to make it obvious. This is simple. Right, so depth cross and golden cross upwards, yeah? So that's a good depth cross there, not bad. The problem is with this strategy, look at this kind of situation. You can get chopped in and out. Okay, granted, if we took it even further back, we would have caught that move there. So we can do that. We'll go back. Is that 1st of August should catch that? Let's have a look. We'll run it. Again, zoom out. I'll make this yellow. So our depth cross and golden cross, and you can see that cell shouldn't be there. That's just because we started the test there. It would have actually have been over here when the cross happened. But you can see this golden cross upwards wasn't a bad trade. It's just when you get in a consolidation or a scenario like this, you can just get whipsawed in and out of the market. So you eventually do catch one. So the overall picture is okay. It's not fantastic. It's just better, in my opinion, to do what we did earlier in the video. Don't be lazy. Draw your lines. You know, wait for your breakout and your trend to form, and then just look to trade in the direction of the trend, whether that's using support and resistance, pullbacks. You know, nice breakout there. That's an NFP. First Friday of the month, non-farms payroll candle there, hence the big move downwards. No problem. We could have got in on this trend with that momentum there anyway. Then, you know, again, we have a pullback here. Nice support level, support becomes resistance, and so on and so forth. Okay, so the point I'm trying to make is in this instance, once we're in this downtrend here, you know, we can configure the MAs that we're happy to take across, but it's got to be in the direction of the trend, okay? And again, you can optimize. So we could just say, I want you to optimize the optimize these MAs, the fast and the slow, using the crossover strategy, closing on the opposite for that data, and choose the best performer. And there you go. You have a good looking set file, but it's over optimized. It's curve fitted for the data. If we take it back to the whole year, what happens? Well, it's not terrible. It's not terrible, but you know, it's not ideal. It's just random, and you know, probably if we take it back, let's take it back another year just to see. Curiosity. See, there you go. There's my point. It crashed out. Okay, over optimize on the certain data set, which is what a lot of developers do, and make EAs look fantastic when they don't really have any logic behind them. What I like to look for is the EA that has consistent results using the same settings across multiple currency pairs for, I don't know, 10 to 20 years of historical data. That for me shows a solid strategy rather than a random one, because we've just run an over optimization there for 2 years. Okay, and we've got this. This probably will look really good. Well, that looks great. Should we sell it? No, it's over optimized for the last 2 years of data. I'm pretty sure if we take it back another 2 years, what happens? Well, okay, it's not terrible, but I can pretty much tell you where the last 2 years start, and it's probably around here. Okay, maybe slightly further on, down here somewhere. around here. So after the bumpiness, that upwards curve is where the optimization was done from. Okay, I'm just trying to emphasize, don't rely too much on over optimization or curve fitting. I personally think it's better to have a just a solid logic and don't be lazy really. How would I implement this? I would just be personally, I'm more of a price action trader, so I would bin off these moving averages completely because my eyes can tell me that the market's moving downwards, and I just use support resistance trend lines and try and trade on the breakouts, maybe even the pullbacks, keep an eye on candlestick formations as well. Okay, if we zoom in, you can usually spot some candlestick formations like here. There's a 3 inside down formation. In fact, there's 2. There's one there and one there. That's basically when you have a bullish candle followed by a bearish candle that's at least 50% of the bullish candle's body, and then another bearish candle that breaks below the low of the initial bullish candle. So that could have been an entry there. Okay. And you can see that it's actually a nice ledge here as well. Wedge formation. Okay, price consolidation, breakout to downside. You've got a bearish spinning top there, and then 3 black crows in a good breakout to the downside. Okay, so there are loads of different ways you can trade using price action. Just it's good to know your candlestick patterns. I've got lots of videos on the various candlestick patterns you can use. Support resistance, simple higher highs, lower lows, lower highs, higher lows. Don't know if I said that. But if you insist on using a moving average EA and you want it to give you alerts, you can use the crossover. So let's just say, put too many lines on the chart now, I confuse myself. Let's just say we're in a downtrend now. What could we do to try and, if we're insisting on using moving averages, perhaps we can use a 14 and let's say a 35. Okay, and you can say, right, I want to enter on a pullback. So when price crosses, when the 14 crosses above the 35, I'm going to try and enter on that pullback, and that happened there. So you can either enter when the price crosses back below here, which is not bad because lower highs, okay? Or you can just draw your support, wait for the pullback to complete, and then enter on the breakout. Support becomes resistance, and that could have been a good trade. Okay, because we know we're trending down. The thing about that is we miss opportunities like this one. Okay, because even though they didn't cross back over, it still would have been a good breakout trade there. But you can have an alert on the crossover here. You get excited, load up your chart. I know it's a downtrend. We've had my crossover. This means there's a pullback. I might be able to get in. And again, you can either enter on the cross back over on the other side or breakout of support. Happened again around here, but by now we might be thinking we're going to end up selling too low. Okay, it's not what you want to do, but after the crossover there, oh, there's a pullback. I want to get in on this trend. Draw your support level, support breakout, support becomes resistance, price continues falling, and you can do that more or less all the way down to the bottom. So that's one way I'd use it. I just want it to send me signals on the crossover of the 2 moving averages. They're 14 and 35 moving averages, but you can use any value depending on type of trading you want to do. And if we go back to the other strategy of just the moving average, so that would basically 1 moving average. So we'll delete 1. You're looking to enter in on this downtrend. Okay, so again, we'll draw our lines. You want to get in on this downtrend. How are you going to time your entry? Well, I'm going to use the EA to send me alerts, and it's going to alert me when the price goes above the, should we use the 35? Well, we'll stay with 35. So when price goes above the 35, like here, send me an alert ping. I get my alert quickly. It's a pullback. And again, draw your line and on the breakout ping, price is crossed back above, get ready. Don't just jump in straight away. Look for your candlestick patterns, your support level, and again, you can trade on the breakout. Same thing as we did with the crossovers, but just get alerted when the MA crosses above. Telling you that basically there is a pullback Okay. And you could do the same in an uptrend as well. You know, if you're paying attention and you know that prices had its support, it's making higher lows. Okay, you're going to wait for a pullback. And then, I mean, this is a, if you want to argue this is a pullback, it just means you've got to wait a bit longer. Okay, well, this pullback here, look, this is a good example there. Okay, so pullback, ping. You can enter on the breakout there. Okay, pullback, ping. Come to your charts, be patient. And then you can always just wait for a breakout again, whether you want to draw your lines like that. I mean, some traders, you know, they're going to be more traditional, might want to just use the resistance like that, which of course you can do. Same with this one. And you can see that that resistance breakout there becomes support and price continues upwards. Okay. Again, you will miss opportunities here depending on what moving average you're using. This would have been a decent pullback and a breakout, a good breakout trade. You see that big breakout candle, but you wouldn't have been alerted unless, let's just say you were using a 21 moving average, you would have been alerted. Oh, even here as well. But yeah, it just depends on your strategy. Ideally, you'd want to get in as early as possible on moves like this. But the EA, you know, hopefully I've covered most of it. Ask me any questions if you've got any. I'll be happy to help. But generally speaking, it can be a good way to help you time your entry into trends. It's got some money management aspects, but I do think like you should make some effort to use sensible money management. Again, I would like to lock in trades as soon as possible, at least at break even. Trail with the recent highs or the recent lows to maximize big moves like this as much as possible, and use, you know, relatively tight stop loss. Yeah, you know, I wouldn't want to get in on this trade here. Let's just say this trade here, we've had an alert, we're going to get on this 50 pip stop loss. I only use a 50 pip stop loss, let's say, if somebody said that, and then they exited here and they're happy as Larry, they got their 50 pips, but in reality they've left 200 plus more pips on the table. Okay, they could perhaps re-enter here, but the more you re-enter, the more chance you have of getting it wrong. And to clarify as well, we're trading with the trend. You know, if we end up trying to buy in this downtrend here in this scenario, we're just making our life much more difficult than it needs to be. Okay, well, hopefully you found something useful in this video. I do appreciate you watching. If you can please like and subscribe, it would be great. Catch you on the next one.